Today we have to start controlling, and I have sent the material to all of you. If anybody does not receive, let me know, I will send it. So this file contains the material up to internal order accounting, right? So this material contains the files for cost element accounting, cost center accounting, and internal order accounting. After that, we have profit center accounting, profitability analysis, integration, SD integration, product costing, and new GL. So for those modules, I will be sending the material separately. So first let us try to understand what is the functions and what is the significance of this controlling component. See here, controlling. This component is used to provide the information to the management for the performance analysis and decision making. So this component is mainly used for internal reporting. And there are three levels of management. That is lower level management, middle level management, and top level management. So you take any company, we have the three levels of management: middle level management, lower level management, and top level management. So the lower level management is always concerned with the data entry job. That's it. So they don't require any information. Now take the middle level management. The middle level management includes departmental heads. So these departmental heads periodically want to know the performance of their respective departments, how their departments have performed in the previous month, how a group of people in their departments have performed in the previous month, and for that matter, how every individual have performed in the previous month. So this is called performance analysis. So the middle level managers or the middle departmental heads, they want to know the performance of their respective departments. For that purpose, they need some information. That information is provided by the controlling component. And you take the top level management. So the top level management is always concerned with strategic decision making. What is the strategic decision? The decision which have the long-term impact on the profits of the company are called strategic decisions. I will give an example to make you understand the significance of this controlling component. See, we are producing and selling three products: product A, product B, product C. Now this year, the management wants to increase the production capacity of one product. For that, they need lot of other parameters. For example, first they have to look into see for which product they have the demand. So they know that for all the three products, there is equal demand. And also we have to have the additional production facilities. So we have the additional production facilities available for all the three products. We have to have the marketing staff. So we have the equal marketing staff for every product. So like that, all the parameters are equal for all the three products. Apart from this, they have to know the most important piece of information: what is the profit contributed by each of the product. If they know what is the profit contributed by each of the individual product, then they can go for the increase of that product which is earning more profits to the company. Today we have to start controlling. Today we have to start controlling, and I have sent the material to all of you. If anybody does not receive, let me know, I will send it. So this file contains the material up to internal order accounting, right? So this material contains the files for cost element accounting, cost center accounting, and internal order accounting. After that, we have profit center accounting, profitability analysis, integration, SD integration, product costing, and new GL. So for those modules, I will be sending the material separately. So first let us try to understand what is the functions and what is the significance of this controlling component. See here, controlling. This component is used to provide the information to the management for the performance analysis and decision making. So this component is mainly used for internal reporting. And there are three levels of management. That is lower level management, middle level management, and top level management. So you take any company, we have the three levels of management: middle level management, lower level management, and top level management. So the lower level management is always concerned with the data entry job. That's it. So they don't require any information. Now take the middle level management. The middle level management includes departmental heads. So these departmental heads periodically want to know the performance of their respective departments, how their departments have performed in the previous month, how a group of people in their departments have performed in the previous month, and for that matter, how every individual have performed in the previous month. So this is called performance analysis. So the middle level managers or the middle departmental heads, they want to know the performance of their respective departments. For that purpose, they need some information. That information is provided by the controlling component. And you take the top level management. So the top level management is always concerned with strategic decision making. What is the strategic decision? The decision which have the long-term impact on the profits of the company are called strategic decisions. I will give an example to make you understand the significance of this controlling component. See, we are producing and selling three products: product A, product B, product C. Now this year, the management wants to increase the production capacity of one product. For that, they need lot of other parameters. For example, first they have to look into see for which product they have the demand. So they know that for all the three products, there is equal demand. And also we have to have the additional production facilities. So we have the additional production facilities available for all the three products. We have to have the marketing staff. So we have the equal marketing staff for every product. So like that, all the parameters are equal for all the three products. Apart from this, they have to know the most important piece of information: what is the profit contributed by each of the product. If they know what is the profit contributed by each of the individual product, then they can go for the increase of that product which is earning more profits to the company. So for this information, they cannot use the profit and loss account which is prepared in the FI component, because the P&L account will display the total picture of the company as a whole. The P&L account which we prepare in the financial accounting will show the total profit of the company as a whole. There we cannot distribute the profits according to the product. But here the management wants to know the profits according to products so that they can take a decision of deciding which product they have to increase in the terms of production. For that, the management has to depend on the controlling component only. So in the controlling component, there is one module which is called profit center accounting. So using the profit center accounting, you can bifurcate the profits according to any criteria required by the management. So here what I mean to say is, this is the necessity and significance of controlling component. So The main purpose of this controlling component is to provide the information to the management which is necessary for them for the performance analysis and decision making process. That's why this controlling component is called internal reporting tool. And FI is called external reporting tool, because after preparing your P&L account and balance sheet, we have to submit this P&L account and balance sheet to many external legal agencies like banks, stock exchange commission, then income tax authorities, sales tax authorities. Like that, to many external authorities, we have to submit these financial statements. That's why this FI component is called external reporting tool. And CO is called internal reporting tool. So here, this controlling component is always concerned with analysis of expenses and revenues. That's it. This controlling component is always concerned with analysis of expenses and revenues, because here the resources of any company are very much limited. With the limited resources, they want to maximize the profits. For that, we want to analyze the expenses to see where it is possible to reduce the expenditure. By reducing the expenditure, we can maximize the profits. No? Similarly, they want to analyze the revenues to find the ways where it is possible to increase the revenues. So either by increasing the revenues, so they want to analyze the revenues only. That's why either by increasing the revenues or decreasing the expenses, or by both, we can maximize the profits. No? That's why this controlling component is always concerned with analysis of expenses and revenues. And these expenses and revenues are existing where? In the general ledger accounting. So we maintain the expense accounts and the revenue account, GL accounts in the general ledger accounting only, right? So the general ledger accounting is the base for the controlling. So we don't have anything to do with the balance sheet items. Means we don't have anything to do with the subsidiary ledgers. Accounts payable, account receivable, and asset accounting, they are not necessary. So if you know how to post the transactions in the general ledger, you can understand controlling. So here the expenses and incomes are existing in the general ledger accounting. So how the data is flown into controlling? Here in the financial accounting, we have the general ledger accounting, right? In the general ledger accounting, we maintain the GL accounts for every expense account and for every revenue account. So that is called main ledger, you know, right? So with the general ledger accounting, all the other modules are integrated. If you remember, at the beginning of the general ledger accounting, I told you that the general ledger accounting is called main ledger, and all the other modules of SAP can be and should be integrated with the general ledger. So we integrate all the other modules of SAP with the general ledger. For example, asset accounting is integrated, plant maintenance is integrated, metals management is integrated, sales and distribution is integrated, PPC, HR, like that, all the other modules of SAP are integrated with the general ledger. As a result, and each module is used to process the business transactions in one department. So every day in every department, some expenses are taking place and some revenues are also earned. So whenever the expenses are incurred and revenues are derived, these expenses and revenues are entered by the users of the respective departments in their own departments. As a result of integration, the respective GL accounts of expenses and revenues which are maintained in the general ledger are updated. Means what? The total expenses and revenues of your total company code are available in the general ledger. So from the general ledger, the information is transferred to controlling. This is called data flow. Now, here we have to understand one concept which is called controlling object. Controlling object. It is the entity for which maintained in controlling. Means, if you remember, in FI, we have posted expense and revenues for each GL account in the general ledger accounting. In accounts payable, we have posted purchase invoices, part payments made, full payments made, then advance payments, etc., with reference to vendor master record. Then in account receivable, we have processed all the business transactions with reference to customer master record, right? Like that, similarly, in controlling also, there should be something with reference to which we can maintain the information, we can process the information, we can analyze the information. That something is called controlling object. Something is called controlling object. Here, three words are important: maintain information, analyze information, maintain information, process information, analyze information. Maintain, analyze, process, map. So these are the three activities that are very important in the controlling component. Manage the information, analyze the information, manage the information, process the information, analyze the information. Manage, process, analyze. Clear? So these controlling objects were already defined in the system. You cannot maintain your own controlling objects. The controlling objects were already defined in the system, and with reference to one of these controlling objects or with reference to all of the controlling objects, you can maintain, process and analyze the information. So the system maintains the information for each controlling object through primary cost element and secondary cost elements. So what is the primary cost element and secondary cost element? We will discuss later on in the cost element accounting. So what are the controlling objects? So these are the controlling objects which are already available in the SAP R3 system. Number one, cost center. So with reference to cost center, we maintain, process and analyze the information in the cost center accounting. So cost center accounting is one module in controlling. What is cost center? How the information is maintained? We will see later on. Here we are just discussing what are the controlling objects. Then internal order is another controlling object. So with reference to internal order, you maintain the information, you process the information, you analyze the information in the internal order accounting. This is another module. Then cost object. For the cost object, you maintain the information, you process the information, you analyze the information in the product costing module. This is another module. Then profitability segment. So for the profitability segment, you maintain the information in the profitability analysis. This is another. Then profit center. For the profit centers, the information is maintained in profit center accounting. This is another module. Then projects. For the projects, the information is maintained in project systems. But the project systems is a separate module like FICO. So we are not going to touch the projects or project systems in the controlling. So these are the 5 modules that are available in the controlling. One is cost center accounting, internal order accounting, product costing, profitability analysis, and profit center accounting. So for all these modules, there is one base module which is called cost element accounting. For all these modules, there is one base module which is called cost center accounting. Without cost center accounting, right, these controlling objects or these modules cannot accumulate information. So these are called controlling objects. Now, the controlling object receives the information from every module. That is the beauty of this controlling. The controlling object receives the information from every module. Like what? Raw material consumption is received from the materials management. So there is one module which is called materials management. So this module is responsible for the procurement activities and inventory management and material issue activities to production. So whenever the MM is implemented, that is integrated with FI. So when the material is issued to the production processes, when the material is issued to production, This issue is entered by the MM end user in MM module. Then, through the process of integration, the raw material consumption GL account in FI is automatically updated. So from the general ledger, the raw material consumption is taken to controlling. Means what is the original birthplace of this raw material consumption? Metals management. So from the metals management, the raw material consumption is posted to general ledger. From the general ledger, that is taken to controlling. That's why we say that the raw material consumption is taken from metals management. Not only raw material consumption, all the material management expenses. What are all the expenses which are concerned with proper maintenance of your inventories? And also, you incur some expenses while procuring the raw materials, like inward freight. Then input taxes. Input taxes means the taxes which are paid in the purchases. Input taxes. So all these are transferred from metals management to general ledger. From the general ledger, they will be transferred to controlling component. Then depreciation from asset accounting. So already we have seen that when we execute the depreciation account in the general ledger is updated, right? Means the depreciation is taken from asset accounting into general ledger. From the general ledger, that is transferred to controlling component. Then revenues and sales and deductions from the sales and distribution module. Revenue means sales revenue. So when the SD is implemented, that is integrated with SD. So the sales invoice are raised in SD only. When the sales invoice is raised in SD, due to the integration, the sales account in the general ledger is automatically updated. So MM integration, SD integration we will see later on. So the sales GL account in the general ledger is updated. From the general ledger again, it is transferred to controlling. Means what is the original place of this sales revenue? SD. From SD to general ledger to controlling. So controlling from SD to controlling via general ledger. That's how every expenses will be passed on to controlling via general ledger. Then personal cost from human resources accounting. So there is one module in HR which is called payroll accounting. So the user in the HR will execute the payroll every month. He runs the payroll every month. As a result, salaries account, contribution to PF, contribution to ESI and other legal funds, wages accounts are updated in the general ledger. From the general ledger, they are transferred to controlling component. Then production information or production schedule information is taken from production planning and control. Production quantities, raw material inputs, all this information is taken from production planning and control. Then what, like that, majority of the expenses are taken from different modules. Then what is taken from FI, general ledger directly? All the expenses other than we have discussed till now will be posted directly in the general ledger and they will be taken to controlling directly from the general ledger. We have to take care, right? FI consultant has to take care of these integrations in consultation with the respective other consultants. MM integration is done by FI consultant only in consultation with the MM consultant. SD integration is done by FI consultant only in consultation with the SD consultant. Okay, Anil? All the integrations has to be taken care by FI consultant only because he is having the accounting knowledge. So all the expenses other than the above are called overheads. Overheads are taken from financial accounting. So what is overhead? This is the most confusing concept for everybody. What is overhead? As this is a very confusing concept for many of the people, right? For next half an hour, I will discuss these overheads from the academic point of view. If you understand the concept of overheads, SAP controlling is very easy for us to understand. So from now onwards, one second. Okay, so what is overheads? Let us try to understand. Let us see, Anil, right? You are right, but let us try to understand from the theoretical perspective. Overheads, put heading in the notes, overheads. It is the sum of indirect material cost. It is the sum of indirect material cost, indirect labor cost, and indirect expenses. And indirect expenses. That is the meaning of overheads that everybody knows, right? But the problem is, what is indirect material? What is indirect labor? What is indirect expenses? That is the main problem in deciding, right? Continue. Continue. The following are the main objects of cost accounting. The following are the main objects of cost accounting. Number one, to ascertain the cost, means to find out the cost. Number one, to ascertain the cost. Number two, to control the cost. To control the cost wherever it is necessary, wherever it is possible, not necessary, wherever it is possible. Wherever it is possible. So what is the controlling the cost? Taking the actions to reduce the expenses. So to reduce the cost of production, that is called second activity, second objective, to control the cost. So the major objectives of the cost accounting component is, see, controlling is nothing but cost accounting. So the major objectives of the cost accounting is, first, to ascertain the cost, to find out the cost. Once the cost is ascertained, we have to analyze whether it is possible to reduce the cost. That is called controlling the cost. So these are the two major objectives. Keeping them in view, let us try to understand what is overheads, right? Now, you take the cost of any product. Broadly, it contains three components: material cost, labor cost, and other expenses. Cost is divided into direct material cost, indirect material cost. Labor cost is divided into direct labor cost and indirect labor cost. Then other expenses are divided into direct expenses and indirect expenses. So I told you that the total or the sum of indirect material cost, indirect labor cost, and indirect expenses is called overheads. But the thing here we have to understand is what is direct material cost, indirect material cost, what is direct labor cost, indirect labor cost, what is direct expenses and indirect expenses. We have to understand these concepts, and also you have to understand why the cost is to be bifurcated like this. Then only you can understand the concept of overheads. So what is direct material cost? It is the cost of the material which satisfies the following two conditions. It is the cost of the material which satisfies the following two conditions. One is the material should be directly identified with any product or service or department. The material should be directly identified with any product or service or department. Then the cost of that material should occupy the larger portion of the total cost of the product. So any material which satisfies both the conditions, please remember, the material has to satisfy both the conditions. So any material which satisfies these two conditions is called direct material cost. Then indirect material cost. It is the cost of the material which satisfies only one or none of the above two conditions. Means what? Let us take one example. Here, let us take the example of computer table. Computer table, right? So, in order to manufacture the computer table, we require wood. Number two, iron frame. So, I am talking about the traditional computer table, right? Number three, nuts and bolts. So, let us assume these are the three materials we are using, materials only we are using to produce one computer table, right? Now, wood. By measuring the size of the wooden pieces we have used in the manufacture of a computer table, we can say that this much square feet of the wood has been used in the manufacture of this computer table. So, first condition is satisfied. No? The material should be directly identified with any product or service or department, right? First condition is satisfied. Then, the cost of the wood will occupy larger portion of the total cost of the product. For example, if the cost of the computer table is $100, the cost of the wood will occupy minimum to minimum $25 to $30. So, it is occupying larger portion of the total cost of the product. So, the wood is satisfying both the conditions. So, wood is called direct material. And the cost of the wood is called direct material cost. Now coming to iron frame. So by measuring the length of the iron frame, we can say that, okay, this much 4 running feet of iron frame we have used. So first condition is satisfied. Again, if you compare the cost of the iron frame with the total cost of the computer table, it occupies larger portion again. The cost of the iron frame will be at least $20. So it is also occupying larger portion. Both the conditions are satisfied by iron frame. So iron frame is also called direct material, and the cost of the iron frame is direct material cost. Now coming to nuts and bolts. So by just measuring, by just counting physically, we can know that, okay, 10 nuts and bolts have been used in the computer table. First condition is satisfied. But what is the proportion of the cost of the nuts and bolts to the total cost of the product? Very less. Hardly you might have used nuts and bolts worth of $1. But what is the total cost of the product? $100. So when compared to the total cost of the product, when compared to the total cost of the product, the cost of the nuts and bolts is very less. Second condition is not satisfied. So nuts and bolts is called indirect material cost. One more example. Take the shirt, what we wear. The cost of the cloth is direct material cost. The cost of the collar cloth is direct material cost. Cost of the material cost. Cost of the thread is indirect material cost. Clear? Take the shoes. Cost of the leather is direct material cost. Cost of the sole is direct material cost. Cost of the polish material is indirect material cost. Cost of the lace is indirect material cost. Clear, no? So here, for every material, you have to apply these two conditions. If both the conditions are satisfied, direct material cost. Otherwise, indirect material cost. That's how you have to differentiate between direct material cost and indirect material cost. Till now, I hope it is clear to everybody. If anybody wants me to explain again, I will explain again. Okay, but why? But why we have to differentiate between direct material cost and indirect material cost? That is the important point we have to understand. So here we are doing business in the furniture market. So the furniture market is very, very tough and competitive. So we are producing and selling computer tables. Your competitor has reduced his selling price. So you are also forced to reduce the selling price. Otherwise, you lose your market share to your competitor. So when you reduce the selling price, obviously it will have the negative impact on your profits. So even though you have reduced the selling price, the management wants to see that the profits are not reduced. If the profits are not to be reduced, what are the alternatives available to the company? You have to increase the quantity of the sales, which is just impossible, because already we are operating in the competitive market. It's impossible to increase the quantity. Then what is the other alternate? You have to control the cost. And your cost includes material cost, labor cost, and other expenses. Again, first we concentrate on the material cost first. And the material cost is also contains direct material cost, indirect material cost. So just now we have seen that direct material cost will occupy larger portion of the total cost of the product. And the indirect material cost will occupy smaller portion of the total cost of the product. See, what is the cost of the computer table? $100. What is the cost of the nuts and bolts? $1 or $2. So the indirect material cost will occupy smaller portion of the total cost of the product. In this case, on first on which component you concentrate? First, we have to concentrate on direct material cost, because direct material cost is occupying larger portion. So by just changing the design of the computer table, you will be able to reduce at least a half a feet or quarter feet of wood you require. To that extent, the cost is reduced. But if you concentrate your controlling efforts on the indirect material cost, at the most, you will be able to reduce 1 nut or 2 nuts. If you reduce more than them, it will not stay on the ground. Then what is the cost of 1 nut? It is very, very less than 1 cent. In this case, the cost of analysis is more than the benefit of analysis. That's why at this point of time, the conclusion is, we have to analyze direct material cost. It is not economically feasible to analyze indirect material cost, because individually it occupies smaller portion of the total cost of the product. Clear? That's why material cost has to be divided, or material cost has to be bifurcated into direct material cost and indirect material cost. Now coming to direct labor cost. See, it is the remuneration or salaries paid to the people who actually engaged in the process of production and whose portion will occupy larger portion of the total cost of the product. For example, we have one computer tables manufacturing department, right? And there we are producing computer tables. So we have 10 workers. Each worker is producing 1 table a day. And for each worker, we are paying $50 as daily wage. Then what is the cost of the labor per table? 50. So it is occupying larger portion of the total cost of the product. And these 10 people are directly engaged in the manufacturing process. These 10 people are putting their hands directly into manufacturing process. Means they are cutting the wooden pieces, they are doing the polishing, they are doing the shaping, and they are bending the iron frame, and within the bent iron frame they are fixing the wooden pieces. Like that, these 10 people are directly putting their hands in the manufacturing process. This is called direct labor cost. Clear? Now, it is the indirect labor cost. It is the remuneration paid to the people who assist in the production. So in order to supervise the work of these 10 workers, we have appointed one departmental supervisor. And for this departmental supervisor, we are paying a salary of $1,000 per month. He is not directly putting his hands in the manufacturing process. He is just supervising. So he is assisting the management to see that the production is carried on smoothly. And here we have 10 workers. Each worker is producing 1 table a day. What is the output per table? What is the output per day? 10 tables. And we have the 25 working days. 25 working days into 10 tables. What is the total output per month? 250 tables, right? Then we are paying a salary of $1,000 to supervisor. Then what is the proportion of supervisor salary per table? $4, which is very, very less when compared to total cost of the product. So the salary of the supervisor is indirect labor cost. Clear? Now coming to analysis perspective. So the labor cost is bifurcated into direct labor cost and indirect labor cost. So direct labor cost occupies larger portion. So you have to first analyze direct labor cost. After analyzing direct material cost, now you have to come to analysis of direct labor cost, because it is also occupying larger portion. Now in this case, you have to look into the possibility of making 10 people produce 11 tables a day. How to make 10 people produce 11 tables a day? Presently 10 people are producing 10 tables, and for each worker we are paying $100. So total labor cost is $1,000. With the same $1,000 labor cost, if you make these 10 people produce 11 tables, the labor cost per table will be coming down now. So you have to think in that perspective. In that way, you have to analyze direct labor cost. But indirect labor cost, it is occupying very smaller portion. So it is not economically viable and feasible to analyze indirect labor cost individually. Clear? Then coming to direct expenses. These are the expenses other than material and labor which can be directly identified with the product or service or department. For example, in order to produce this computer table, we require a separate technology, and the technology is not available in the market for the outright purchase. So we have made an agreement with the vendor of the technology to pay $25 per table you produce. That is called royalty. So royalty is the direct expenses. Indirect expenses. All the expenses which cannot be conveniently identified with any product or service or department. For example, printing and stationery, traveling expenses, petrol expenses, diesel expenses. With which product you identify these expenses? No, not possible, right? So these are called indirect expenses. Again, direct expenses occupy larger portion and they are directly identified with the product. So coming to analysis perspective. Direct expense occupies larger portion, so you have to analyze them. Now in this case, you have to bargain with the vendor, saying what? Sir, this year we have been facing a lot of tough competition, right? It is the question of our survival. We have been paying lakhs of rupees as royalty to you since a number of years. But this year, we are not in a position to survive. So we are restructuring our cost. So as the process, in that process, we are requesting you to reduce at least $1 or $2 as royalty for this year so that we can survive and you also get the royalty from us. If I close our organization, right, the proportion of the royalty which you are getting from our company till now, that also you will lose, no? That's why we are requesting you to reduce $1 or $2 as royalty per table. That's how you can negotiate with the vendor, no? That's why direct expenses are to be analyzed. Basically, because they're occupying larger portion than indirect expenses. It's not at all possible to identify the product. In that case, how can you control? Printing and stationery, traveling expenses, petrol expenses, diesel expenses. They cannot be apportioned to products. That's why these are called indirect expenses. So it is not feasible to analyze indirect expenses individually. Then what is the conclusion? We have to analyze direct material cost, direct labor cost, direct expenses because they are occupying larger portion. It is not economically viable to analyze indirect material cost, indirect labor cost, indirect expenses individually because individually they are occupying smaller portion. But if you sum up the individual, if you sum up indirect material cost, indirect labor cost, indirect expenses, they become larger portion. No? Now they can be analyzed. So indirect material cost, indirect labor cost, indirect expenses can be analyzed in the summation. In the summarized entity, you can analyze indirect material cost, indirect labor cost, indirect expenses. That sum is called overheads, nothing else. And these overheads are directly posted in FI general ledger and they will be transferred to controlling. Printing and stationery, directly posted in the general ledger. Petrol expenses, directly posted in the general ledger. Traveling expenses, directly posted in the general ledger. So all the overheads are directly posted in the general ledger of FI and from there they will be transferred to controlling component for the analysis purpose. So that is the concept of overheads. And these overheads are classified in many ways. Like the most important classification for the purpose of our cost accounting is functional classification. Functional classification of overheads means administration overheads, factory overheads, sales and distribution overheads, research and development overheads. So this is one way of classification. Another way of classification is behavioral classification of overheads. First one is functional classification. Functional classification is administration overheads, factory overheads, sales and distribution overheads, and research and development overheads. This classification is called functional classification. Another classification is behavioral classification. That is fixed overheads, variable overheads. Whatever may be the quantity of your production, the fixed overheads remains the same in totality, in total. For example, rent. Rent is fixed. See, your installed capacity is 1 lakh and you are paying a rent of $3 lakh. You produce 50,000 units, rent is same in total. You produce 75,000 units, rent is same in total. Even you don't produce anything, you have to pay rent. So the expenses which are fixed in totality, they are called fixed overheads. Variable overheads means they vary in totality in proportion with the quantity of production. If you increase the production, total expenses are increased. Reduce the production, total expenses are reduced. They are called variable overheads. This is the important two classifications of overheads. With this, we will proceed with the controlling, right? So here, controlling area. This we will discuss in tomorrow's class. Akanksha, you have any questions? Okay. Alok. Okay. Anil. Okay. Gadi. Gadi, Khalid, okay, Madhusudan, okay, Prabhi,
No, sir.
okay, Purushottam, okay, Gadi, okay, Tafik, okay, Teja, 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 are you there? Okay. Okay, then see you tomorrow same time. Good night and good day. What is controlling area? See, controlling area. It is the organizational unit in controlling for which all the controlling activities are conducted. It is very similar to company code in FI. In financial accounting, we have configured everything in the company code. But in the controlling, we configure everything with reference to controlling area. So from now onwards, we are going to perform some activities, and all these activities will be performed in the one organizational unit. That organizational unit is called controlling area. So at this level, the CO component records, analyzes the overhead related activities, that is cost elements, cost center accounting and internal orders, manufacturing related activities and expenses like product costing, and also analysis and evaluation of activities of internal units, that is profit center accounting. Means all these modules are performed at the controlling area level only. As I said, right, FI organizational unit is company code. CO organizational unit is controlling area. In that way, you can assume. So first we have to maintain the controlling area. Here, there are two scenarios in which we can maintain the controlling areas. Both the scenarios I will explain. Then you can understand which scenario we have to use in the real time. Number one, controlling area same as company code. Means here controlling area same as company code. The enterprise structure for controlling is based on FI enterprise structure. You know the FI enterprise structure, right? Company. On the top, you have the company. Under that, we have the company code. After the company code, we have the business areas. So these are the organizational structure for FI. So in the first scenario, controlling area same as company code, right? The controlling area is maintained at the company code level. The controlling area is maintained at the company code level. Maintaining the controlling area at the company code level means for each company code, you maintain a separate controlling area. Suppose under the company, we have 10 company codes. Then for each company code, we maintain a separate controlling area. Means for 10 company codes, we maintain 10 controlling areas. Means again, we assign the first company code to the first controlling area. We assign second company code to the second controlling area. We assign the third company code to the third controlling area, and so on. This is called controlling area same as company code. Now, we maintain the master records for controlling objects under the controlling area. If you remember, under the company code only, you maintain the master record for customer, vendor, GL account, etc. Right? Similarly, in the controlling area, you maintain the master record for each controlling object. Controlling object means cost center is a controlling object. This we have discussed yesterday. Controlling object means the entity for which the expenses are, the entity for which the information of expenses and revenues is maintained, analyzed, and processed. That is called controlling object, right? And these controlling objects were already defined in the system. So controlling objects are cost center, internal order, profit center, right? Then profitability segment, cost object. So for each controlling object, we maintain the master record under the controlling area. Then in the master records of controlling objects, we have to assign the business area. We have to. So in the controlling object to master records, we have to assign the business areas. That's how FI organization units and CO organization units are linked with each other. This is called controlling area, same as company code. In this case, we assign a single company code to single controlling area. As a result, the expenses and incomes information of that company code will be taken to respective controlling areas for the analysis purpose. This is what written here. See, in this case, the controlling area is maintained at the company code level. That is, for each company code, we create a separate controlling area. Then, all the expenses and incomes of each company code is taken to the respective controlling areas for analysis purpose. This is one scenario. Then you have the second scenario. Cross company code cost accounting. Cross company code cost accounting means here at the company level we maintain the controlling area. In the previous case, you maintained the controlling area at the company code level, but now in the cross company code cost accounting, you maintain the controlling area at the company level. Maintaining the controlling area at the company level means we assign all the company codes of the company to the same controlling area. You can clearly see the structure there. Controlling area is maintained at the company level, means company code 1 and company code 2 is assigned to controlling area. For example, under the company, you have two company codes, company code 1 and company code 2. Both the company codes are assigned to same controlling area. So in the cross company code cost accounting, multiple company codes are assigned to same controlling area. But in the controlling area, same as company code, single company code is assigned to single controlling area. That is the difference. Clear? Then company code 1 is carrying on business in business area 1, business area 2, business area 3. Similarly, company code 2 is carrying on business in 4, 5, 6 business areas. So when you maintain the master record for the controlling objects under the controlling area, again we assign the business areas to controlling object master records. So in this case, in this example, you assign company code 1 and company code 2 to the same controlling area. As a result, the expenses and incomes information of company code 1 and the expense and incomes information of company code 2 are available in the same controlling area, right? As a result, we can compare the expenses of company code 1 with the expense of company code 2. We can compare the revenues of company code 1 with the revenues of company code 2. We can compare, for that matter, we can compare the profits of company code 1 with the profits of company code 2. That is the advantage of cross company code cost accounting. We can do intercompany comparison. See here, this is what written in your material. See, cross company code cost accounting. In this case, controlling area is created at the company level, that is group level. In this case, several company codes are assigned to the same controlling area. Then all the expenses and incomes information of all the company codes will be available in the same controlling area. Then we can compare the expenses and incomes of one company code with the expense and incomes of other company code. That is the feature of this cross company code cost accounting. One second. So, to assign several company codes to the same controlling area, some conditions are to be satisfied. You cannot assign just like that. There are some conditions to be satisfied for the purpose of assigning the multiple company codes to the same controlling area. What are those? See, all the company codes should use the same chart of accounts. What is the scenario? What is the scenario in which all company codes will use the same chart of accounts? When all the company codes are in the same nature of business, then only we can use the same chart of accounts. Then only all the company codes can use the same chart of accounts. So that is one condition you should satisfy. What is the logic behind this condition? For example, you have A company code and B company code. Then both the company codes are in the different nature of business. A company code is in textiles manufacturing. B company code is in, you can say, service industry. In that case, both the company codes will have their own separate chart of accounts. Then you cannot assign both the company codes to the same controlling area, because when the nature of business is different, how can you compare the performance of textile industry company with the service industry company? What is the logic or what is the conclusion you can arrive? Because the nature of business is different. Clear? But both the company codes are in same nature of business and they are using same chart of accounts. Means what? They are in the same nature of business. Both the company codes are in the textiles manufacturing. In that case, if you compare the performance of one company code with the performance of another company code, you arrive some meaningful conclusion. For example, let us assume, right, I am having two batches. One batch is for MM and the other batch is for FICO. So how can I compare the performance of FICO student with MM student? No. Suppose FICO student got the job in 5 months, MM student got the job in 3 months. Then in that case, I cannot say that MM students are efficient, because MM curriculum is very small and FICO curriculum is very large. That is also very correct in real time also. So I cannot compare the performance here. But if I compare two students in the same FICO batch, then I will arrive some meaningful conclusion. Same is the case in the case of cross company code cost accounting. So all the company codes should use the same chart of accounts. Then all the company codes must use the same fiscal year. Means, suppose you have the two company codes. One company code is in India and another company code is in US. So US fiscal year is January to December and Indian fiscal year is April to March. Now, as on 31st December 2017, I want to compare the performance of both the company codes. In that case, for Indian company code, only 9 months are over. But for US company code, 12 months are over. In that case, how can we compare 9 months performance to 1 year performance? That's the reason why all the must use the same fiscal year. Means the number of normal periods should be same. The number of special periods can be different. There is no issue. So all company codes should use the same fiscal year, means the number of normal posting periods should be same, but the number of special periods can be different. The start period and end period of the fiscal year should be same. Means if the fiscal year of one company code starts with April, the fiscal year of another company code also should start with April and they should end with March. Then the start date and the end date of the each period also should be same. So these are the conditions that are to be satisfied if you want to assign multiple company codes to the same controlling area. Now, here in the case of cross company code cost accounting, I told you, we can assign multiple company codes to the same controlling area. For example, we have the company code 1 and company code 2. When we assign company code 1 and company code 2 to the same controlling area, we can compare the performance of company code 1 with the performance of company code 2. In addition to that, we can compare the performance of company code 1 with the performance of company code 2. Means at the company code level, you can compare the performance. You can analyze the performance. In addition to that, for example, company code 1 is having 3 departments. Department A, Department B, Department C. In the company code 2, again we have the three departments: Department P, Department Q, Department R. In addition to comparing the performance at the company code level, we can compare the performance of Department A of company code 1 with the performance of Department P of company code 2. Similarly, we can compare the performance of Department B of company code 1 with the performance of Department Q of company code 2. Similarly, we can compare the performance of Department C of company code 1 with the performance of Department R of company code 2. At the company code level, you can compare the performance, and at the departmental level also, you can compare the performance. That is the advantage of cross company code cost accounting. So what are the other advantages of cross company code cost accounting? We can reallocate the costs across the company codes. Means you can transfer the expenses from one company code to another company code. Product costing for the products of all the company codes commonly. Means suppose if both the company codes are producing same products, in that case the product costing becomes easy. Then it facilitates group costing. Here group costing means group valuation. If you want to know, suppose you have the two company codes, both the company codes in the same nature of business, then you can find out the cost of production at the group level. That is called group costing. Then it facilitates the transfer pricing among the company codes. Means, for example, vertical integration is there. Vertical integration is there. So the finished product of one company code will become the raw material for another company code within the same group. In that case, transfer pricing has to be done. So the transfer pricing becomes easy. So these are the advantages of the cross company code cost accounting. So planning versions we will discuss later on when we start configuration of the respective step. So see the material. Maintain controlling area. SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. So the data is locked by user Anu and can be displayed only. So you have to unlock the user. So go to SM12. You know how to unlock it. Go to SM12. Give the username by whom the screen was locked. Go to menu lock entry list. Again go to menu lock entry, delete all. SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. Click on new entries. Controlling area is equal to 3366. So here I am using our same company code name. So in your case also you can use the same your company code name only. Controlling area is equal to 3366. Name is equal to controlling area for 3366. Controlling area for 3366. Now look at the screen. Assignment control. Company code to controlling area. I told you two scenarios, no? If you press on drop down menu, see controlling area same as company code, cross company code, cost accounting. So here we are having only one company code. So I am going to use only controlling area same as company code. Then currency type. Currency type. So currency type means here from now onwards, when we post the business transactions in FI, yes, there was a disturbance from my side for internet for few minutes. I hope everybody can hear me now. Roni, can you hear me? Okay. So first let us log in again. Okay, okay,
Yeah, yes, sir. I'm hearing.
okay. See, maintain controlling area, SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. Click on new entries. Controlling area is equal to 3366. Prabi, Alok and Akanksha. This class company code is 3366. So you can use your company code in your practice. Name is equal to controlling area for 3366. Now, this is called assignment control. Company code to controlling area. If you press on F4, you have the two options. Controlling area same as company code, cross company code, cost accounting. So here I am having only one company code. So we can use only controlling area same as company code. Then currency type 10 means company code currency. So what is currency type here? From now onwards, when you post a transaction in FI, the controlling